Bitcoin bounce. Peter Boockvar, who is CIO of Bleakley Advisory Group, is a crypto bear. He joins us on the phone. Peter, the last time you were on Futures Now, you said Bitcoin is a gigantic price chase based on nothing. What worries you about the most of the price activity that we've seen the last couple of days?
Well, and I want to separate again the price of Bitcoin versus the technology, the concept, and so on. It's the price itself along with other cryptos. The problem is that when Bitcoin was originally conceived, 21 million Bitcoins, there was a finite nature of them. Now we have all these Bitcoin forks and we have all these other cryptos that I think the argument of a limited nature of these cryptos is sort of by the wayside. So now you have technically an infinite amount of coins that can be created. So getting back to the price, I mean, just technically, you really just have to be a chartist to decide whether you want to buy this or not. But after touching almost 20,000, it fell 50% to around its 100-day moving average. And I think if you look back at historical bubbles and crashes, this is sort of following that pattern. And typically when something goes parabolic, like this has, it typically ends up to where that parabola began.
Okay.
And that's at a much lower price than it is today.
Boil it down for me, Peter. How low do you think Bitcoin can go?
I think over time, Bitcoin's going to be around for a long time, but the price itself, I wouldn't be surprised if over the next year is down to 1,000 to 3,000.
Okay. Cryptocurrency is obviously on the forefront lately.
If over the next year is down to 1 to 3.
Okay. Cryptocurrency is obviously on the forefront lately. People know that they could take the stock market down with them. What are your thoughts on that?
Well, I think that would just be more psychological. I think from an economic standpoint, it's not something that really is that relevant in a $19 trillion economy. Now, maybe in South Korea and Japan, where, and even in the U.S., where people are taking on credit card debt to buy coins, yeah, they're going to be necessarily impacted. But I think we have to look at it more broadly in the sense that the central bank bubble manifested itself in many different places, and just recently, cryptocurrencies. So if cryptocurrencies roll over and collapse, then maybe that's a sign that the risk-taking attitude of investors is changing. Maybe that's because of monetary tightening that's intensifying this year. Maybe it's because of the rise we're seeing in interest rates. So I look at it more of a symbol of speculative behavior in and on the downside and what that means. But from a pure economic standpoint, I don't see it having a major impact if the price of Bitcoin continued to decline.
Is there anybody out there that you blame for this crypto boom, this kind of frenzy we've been seeing?
Well, I think it emanated from central banks in that of all the money printing. I mean, when you think about Bitcoin as, okay, let's have an alternative currency that has a finite amount to it that can't be debased and inflated by central banks, and maybe we can also use it as a medium of exchange, and you can buy a slice of pizza with it if the pizza place accepts it. So I point to that, which in a way is also Bitcoin and other cryptos is a great advertisement for gold and silver, because that's another alternative currency. But you have to wonder, if we never heard of quantitative easing, would there have been cryptocurrencies?
That's an excellent point. We mentioned this before. We've had a few people come on the show basically saying if the cryptocurrencies, if Bitcoin crashes, the stock market will crash too, that you need something to form a bubble and for that bubble to burst to take the market down. Your thoughts?
Well, again, I think just gets to it's a measure of speculative behavior that had manifested itself in these cryptos. So if that speculative behavior starts to change their mind on things and go in the opposite way, well, yeah, maybe that does have implications for a stock market that's up 5% in 10 trading days, for example. And maybe it is, like as I mentioned earlier, we're seeing a greater extent of monetary tightening this year. We're seeing a global rise in interest rates, and we're seeing inflation pressures build. Rising interest rates alters people's attitudes towards risk assets. And yes, so maybe if Bitcoin does implode, that does have broader implications, but again, more from a psychological standpoint and sensitivity to changes in interest rates rather than something economically speaking with Bitcoin.
Okay, Grizz, jump in.
Yeah, hi, Peter. You know, I guess the end game of this is to get these into the mainstream, that they start accepting these for payment, meaning cryptocurrencies. But, Peter, how could that happen if you have swings of $1,000 a day or $50 a day, see, in Litecoin, which is a 20% move? How does the local pizza guy accept that as payment when they don't actually know what the payment is?
That's a great point, and they can't. They'd rather take your $2 for that slice of pizza. Just give me, when you think about cryptos and the medium of exchange, yes, if I'm a pizza place, I need to pay, let's just say 2% or 3% to Visa or MasterCard if you pay with a credit card. Whereas if I transacted in Bitcoin, I would pay nothing. But I'd rather pay the 2% knowing that the dollar I'm charging for, I'm going to get $1 back, where in a crypto you have no idea. So I think that sort of muddied the waters in the concept of, this will be another media exchange. Well, it really can't be with these kind of price moves, as you point out.
Okay, Brian?
Yeah, just turning back to the Fed easing and the bubble kind of that we see forming here, I really want to know, what is the difference from countries globally that had printed, roughly $13 trillion over the last 10 years in monetary easing, and why that's any different than cryptocurrencies being printed, so to speak? And isn't it really just people saying they're fed up with a Federal Reserve central banking system now, and here's a different way to look at how to manage money and manage people's currencies and how that's regulated, and they're just done with that? And so why can't that just take over completely? Why is that any different than, the U.S. dollar collapsing? Why hasn't that collapsed after all the amount of money that has been printed into the system?
Right. That's an interesting point. I agree. I think that, as I said earlier, cryptos to me is more of an offshoot from all the central bank money printing. But right now with Bitcoins and other cryptos, you can now create an infinite amount of those. And getting back to gold, there's only a finite amount of gold in the ground, and it's really tough to get out of the ground. So in a way, that's your scarcest alternative currency. And now that we're seeing the flip side of the monetary excesses, maybe this is coinciding with this top in Bitcoin. In 2018, just from the ECB and the Fed alone, they're going to remove $1 trillion of liquidity. Well, Bitcoin topped out in mid-December, 2 weeks before this liquidity draw was increasing. Is it a coincidence? Maybe, but maybe not.